Hello guys and girls, I hope you are doing all right. Welcome to 2022, and in this year we yet again continue to increase our knowledge in the forex market, in the trading market, and we'll be able to try and understand how price books and how we can engage it in the short to long term. Yes, I've been posting for the late part of last year 2021, and I've received lots of love from you guys, and I've seen an increase in number of in the number of subscribers and the messages asking for more content. And yes, I've promised that in 2022 we'll continue to be delivering educational and informative material. It's not just about me showing you a trade setup that was taken and yet you do not get value out of it. You do not know the thinking behind it and why I took a particular setup. But I also want to be explaining and giving you the behind the scenes videos such as this one, so that you can be able to apply the same concept in your trading and benefit yourself. Because at the end of the day, we want to be independent of our mentors and people that we follow or we learn from. And we want to be thinking independently and be able to execute trades on the markets without us being spoon-fed continuously. So that is one of the reasons why I've decided to share such content with you guys. And thanks for the thumbs up. Thanks for the subscribers. And I do hope that you continue to certainly share this content with others. So without wasting time, this is what we're going to be looking at in this short video. Today is a Sunday. I can see it at the bottom of my screen here on the charts. It says 0904. That's New York has just gotten up, guys. But on my side, because I'm in South Africa, it's 4 p.m. 4 minutes after 4. We are just about to get ready for supper. Yes, funny how the world is, right? So yes, it is a Sunday. I've decided to do this video. As you can see, the markets are not moving because I haven't had time to look at to record the trade that I took and to record a video for you to benefit, guys. So I've decided to take an hour or so out of my my schedule on this Sunday so that I can share this with you. So this is what we're going to be looking at. I'm going to show you proof that the markets are 100% manipulated, guys. It is not a matter of buying and selling that determines price. No matter how you want to believe it, no matter if you can climb on the top of the highest mountain or whatsoever to scream it out, it will not change it, folks. We are at the mercy of the institutional banks, guys. This is their turf, this is their playing field, and they don't want us there. It is their product. Currency is their product. They book it however they see fit, no matter what you have been told. The sooner you adopt this or accept this, the better. So we're going to look at proof of manipulation. We're going to look at the dollar index and how I was looking at it for this past week, or maybe or so. And we're going to look at a trade setup that I took, the British pound dollar cable, and how I was applying concepts such as the day of the week, inefficiency, and the reversal pattern that IC teaches. I'll show you a trade setup that was taken there, and also how I was making use of high impact news in order to frame my setup. So let us look at firstly why I was bullish. I was bearish on the dollar. As you can see on the charts, the dollar has been dropping for the most part of this month. It's the 16th today, so the dollar has been in a slow downtrend. I've been bearish on dollar. I'm going to show you proof because some of you will say, "Oh well, you can just put these markings after the event. You do not really know what you are talking about." But to clear that off, guys, let's just quickly go to a conversation I had with a brother of mine. Yes, he's a sibling of mine, Alex. So I just want to show you the conversations we had prior to this taking place. So it was when was this? These are the conversations of as you can see at the top here. Let me move it again. The 7th of January 2022, we talk trading most of the time. We do talk trading with this brother of mine. A trade setup that I was sharing with him. We do share a lot of stuff. So here I was saying to him, Dixie is in a slow downtrend, bruh. For the short to long term, don't be fooled with its momentary strength. It will fall big time overall. So nailing my colors to the mast, I'm bearish on dollar, guys. At least for the short to medium term, I'm bearish on dollar. So what it means, I will be bullish on currencies and also on the US 30, because that is the index that I trade the most. But I also do trade GBP USD. I also do trade euro dollar, because it's not every day that I find setups on US 30. So when I don't find, I do look at euro dollar or the cable to see if I can find good setups there. So I was telling my brother that the dollar is going to fall. Then I sent him a screenshot. I'll show you now. I'll just expand it of the markings I had laid. Here was my sell side liquidity, draw on liquidity. As you can see here, equal lows. For me, this was draw on liquidity. I was looking for the dollar to hit rock bottom here, and it began to do that. I don't remember what day this was, but as you can see, this screenshot was taken prior to this swing low, prior to this drawn liquidity, sell side liquidity being broken. So let's go quickly back to the charts and see what happened thereafter. As you can see, I'm going to expand it now. Yes, we were here, right on this candle here. And as you can see, sell side liquidity hit, and it even went further. Interestingly, it bounced on this previous swing high here and went back up. So this you could use to set your targets here. If you are bullish on the on currencies, you could use this swing here, this swing high here, to set your targets. So now I'm going to show you proof of manipulation. Let us go to Forex Factory and compare the news items and what actually happened on the markets. This is 14th on the Friday. Let's start on the 13th. We had high impact news on the dollar, as you can see by the red envelope here, or folder, or whatever it is. 3:30, that's 8:30 New York. We had high impact news, PPI month on month, medium impact news as well, roundabout it's the same time. So the dollar was this was negative news for the dollar, as you can see. So because this was negative news for the dollar, what would you expect to happen? You would expect the dollar to drop, right? Because this is negative news. This is what we have been what you have been taught, retail understanding of the markets, interpretation of the markets. Look at the figures. They will tell you where price is likely to go to. No, that's nonsense. The Fed already knows this before they release the figures. They are the ones who are releasing them anyway. So they already know this. And they will use this to reprice to wherever they see fit, regardless of what the figures are saying here. So when they happen to seem to be positive, then the dollar rallies, then you think, oh yes, so this does work. No, The Fed is using it in whatever way they see fit. So we said that this was negative news for the dollar. The dollar was supposed to be bearish, right? Let's quickly go back to the charts on the 13th to see what happens. Then we'll move on to the 14th. I'll go to a lower time frame, say the 15 minutes. Say the 15 minutes on the 13th. When the news dropped, 8:30, right here. Expand it a bit. 8:30, the news drops. What happens to the dollar? It's just a momentary drop, right? But after that, what happens? The dollar starts again to go higher. So as much as those were fundamentalists were expecting, because there's negative news for the dollar, it should drop. This part here that you can see, I wish there was a way of showing that, of showing when it was put here, just like as you can see with executions. Unfortunately, TradingView doesn't show you when you did plot this. I would have been interested to go to properties and be able to deduce the date, because this is what I was saying, that I'm looking for the dollar to go up. I'll give you reasons as to why as we go into this lesson. But then it drops just slightly and starts going back up again. Let's go again to Friday. This was Friday again, 3:30, which is 8:30 New York time. High impact news. We have core retail price, retail sales month on month, high impact. Again, negative for the dollar, as you can see here. Then what happens on the chart? Let's go back again. The dollar is supposed to fall, right? Here is the 14th, and the time is 8:30. We have news coming in. Negative news for the dollar. How does that impact the Dixie? It goes up, regardless of what the news has said. In line with what already I had plotted down here on the 13th. Now, having gotten that out of the way, so this is, you can see the proof of manipulation here. It's not what figures do say, but it is what the Fed or institutions, how they want to price their currency. So they priced it higher here, regardless of what the figures were saying. So now let's quickly now move on as to why I was bullish on the dollar momentarily. Again, we go back again to the daily chart. I wanted to use the H1 time frame, but let's start on the dollar or on the daily. This is what I've got here. After this swing, after this sell side liquidity was taken, boom, as you can see, heavily so. Look at this candle here. Look at the expansion. What happened is the dollar dropped deep into these levels, almost breaking this here, touching the top of, and indeed it did touch the top of the previous swing. Because if you look at it here, look at the high, 94.62. What's the low here? Look up here. What's the low here? 94.629. Right? Just shy. But it's there. Depending on your broker, this would be the same thing. So as the dollar dropped, it left a void here, an area of inefficiency. Right here, with inefficiency, we've spoken about this before many times. ICT mentions this, and this is a concept you can also use to frame your trade setups. Inefficiency, it left an area of inefficiency there was not enough trading that took place here between the banks, between for smart money to get involved in this price action here. So what does price do? Price tries to rebalance the imbalance. So there's an imbalance of transactions here taking place right here. So price comes up to try and rebalance that. So let us just quickly put a triangle on that imbalance. Now expand it. Maybe because, like I said, I want to keep my H1. Let me maybe change color to the fill to yellow, right? Hopefully it will work. So this is on the daily time frame. How do we plot the imbalance? Look at the low of this candle here. This candle here, the low. And look at the high of this candle here. So from the low of this one to the high of this one, this whole area here is an area of price imbalance, or fair value gap in short. This whole area here is an area of imbalance. There's been a price has not been efficiently delivered here. So the algorithm will try and get back up to balance this area here, this void. So when you have that in mind and you have other things also, it's not like every imbalance has to be filled right away, right? You have to have other things working together in order for you to frame your setups. So this on Thursday and on Friday actually, this would be a very wonderful day for us to look for this area to be filled here. So I'm going to delete this one and drop into the H1 time frame, because that's the time frame I was using to plot this setup. So we've got this on the H1 again, same thing. Let me expand it for us to see clearly what's happening here. The bottom of this candle here, the low, not the close, the low, and the high of this candle here, from there to here, we extend to the right. This is our FVG, fair value gap. So when I plotted this path here on Thursday, the 13th, I was basically saying I'm expecting price to go up and try and fill this area here on the dollar. But I do not trade the dollar index. I use it to help me find setups or to help me find direction on currencies. By currencies, I mean any pay or any currency that is paid against the dollar, the US dollar. We can think of GBP USD, we can think of Euro dollar, we can think of Aussie dollar against the US dollar, we can think of the Japanese yen to the US dollar. So currencies for me, I would be meaning any foreign currency apart from the dollar, because everything is priced against the US dollar. I don't know why they did that, but that's the way it is, guys. So we look at that now. This is what we've deduced. That price is likely to go back up and fill that gap here, this inefficiency. Now we go into our currencies now, GBP USD. This is what I was trading. This is what I traded on that day. And as you can see, I still have an open trade here. Just highlight it. You won't see the price fluctuating because it's a weekend. The market does not move. As you can see here, this was the order entry. This was my stop loss. This was my take profit. Let me just quickly show you proof of execution. How do we do that? We know, you come up here. Look at this arrow here. as I highlight on the arrow, look at what happens. It says I sold 154,640. This is not Photoshop, guys. If it were Photoshop, it would say something else. It won't do as I'm doing it now. I don't even know how to Photoshop trading view. But for completeness sake, again, I'm going to highlight that proof of execution. Then what I'm going to do now is I want you to keep watching that arrow. I want to show you something. Here I'm going to highlight execution. Look at what's happened to that arrow as I'm doing this. So that's proof of execution, guys, right? So we all agree that this is when I took this trade, right? On Thursday. Time, it was just around the New York Open. As you can see here, it's on the hourly time frame. It says 8. So between 8 and 9, there's an hour. So round about in between there, I wanted to take advantage of the news for it to send this dropping into this fair value gap here. Because already, as we have seen, I'm saying here on Thursday, this is what I wanted to see. Price going up. Price going up to fill this gap here on Thursday. And again on Thursday, I would be, if I'm bullish on the dollar, I would be bearish on currencies, right? So I'll be expecting price to drop. Also, there is this gap here. Let's look into it in detail. Let's just remove some of the clutter. We do the very same thing we did on the dollar currency. The daily time frame. What do we have here? An area of inefficiency. Look at here, the high and the low. That's what I'm going to be anchoring my triangle on, the high and the low. Extend it. So this area in yellow here is an area of price inefficiency. One will be looking for this to be closed up because price briskly went up without allowing selling to take place here in this area here. So the algorithm will remember that area of that void, that gap, and will try and drop into it to close it before it does whatever it does. I don't know what it will do thereafter, but at least that's what I'm using to trade to frame my setup to be at least in the know, as I'd like to put it, for that particular day, for that particular week, to be in the know. So that's what I'm using to frame my setup, and that's how I would have been trading it, and that's how I traded it, as you saw in how I plotted in the execution, proof of executions there. So let's go again now to the 1 hour time frame. On the 1 hour, again, I had here this area of inefficiency here, the high and the low. Plotting that, let me remove it and replot that. This time it's gonna come in yellow, high to the low. We extend it like that. Then we label it H1 fair value gap. That's right. So this is our fair value gap. From here, I'll be looking for price to drop into this area here. So I've already taken profit, partial profit here, as you can see. It says buy 100,000. Of course, I had sold how many units? Let's try and bring that up. 154,640. So here I took partial profit here on my paper trading, my demo account, 100,000. That is the reason now we have 54,640 left, and I'm yet to move my stop loss. Actually, I should have moved it already into profit. So we'll do that when the market opens. In case price doesn't drop further and it turns around, already you have already banked something. You don't want price to come chowing or eating into your profits again here. So the sooner you lock up after taking something, the better. So that's exactly what I would do. Now I can't modify anything, as you can see. Let's see what will happen if I try and do that. It's actually allowing me to do that. I don't know how that is. When the market is not moving. I don't know how that is. I don't know. So I will now come back and modify my order to place my stop into profit. We had again sell side liquidity here. Here it was only this area that I was interested in here. Draw on liquidity, and it left equal low, went back up, then it collapsed. So this is a trade setup that I took on that particular day. So we have seen that even though there was negative news on the dollar, but the dollar went up. And when the dollar is going up, this is what happens with currencies. They fall. GBP USD was the currency I was interested in. It fell. So now let us say you were trading on Friday following the release of the big news or anticipation of the release of the big news of high impact news, 3:30 here again. Let's say you wanted to trade that Friday New York session. But maybe before we do that, let me quickly explain something that will also help clear something. Something also that I was taking into consideration as I was taking this setup. I'm quickly going to mark my days here. Put my daily marker. My days start at 12 midnight New York. This is when the algorithm records or starts its day. From 12 midnight New York to 11:59. So yeah, I'm just going to look for the week that we are just coming from, this previous week. So I've got Friday, Thursday, Wednesday, Tuesday, Monday. That's 1, 2, 3, 4, 5. Let me remove this one. Now we've got Monday, Tuesday, Wednesday, Thursday, Friday. I want us to look again closely into this setup that I took, because I didn't give you everything that time, but I gave you some of the things I was looking at. So according to ICT, this is what happens. The high or the low of the week is set on Monday or Tuesday. And if that doesn't happen on Tuesday, it should be on Wednesday, latest in the London session. The high or the low of the week. So in other words, when the high or the low of the week, for this week that was, the low of the week was on Monday. That was in New York session. The low of the week was set. Price went Tuesday, and you could even frame your setups here. I'm sure if I plot my fib from here to here, you might see something there. Not really sure, but let's try. If you then be trading Tuesday, let's just extend it. Right. Yes. So this is Tuesday. Monday in New York, in London session, we have a high. Then it drops in preparation for New York session. Here, what happens here? I'm going to expand it. If you are swinging, then what do you do? Price dropped nicely into the 62% retracement, then goes higher. 62% retracement. You put your stop loss down here, and you target your targets. I'm not trying. I'm trying not to digress here, so I'm trying to avoid some things. Targets. I don't want to go into that because that would be more to the left of the chart. So if you will be swinging this, knowing that that's the next thing I was going to talk to. Thursday and Friday are usually reversal days, and Monday, Tuesday, they are usually the low of the week, because here, as we can see, price was bullish. This was a bullish week. Why do you say this was a bullish week? For someone new, very new to trading or to this channel, for the benefit of those, let's just show it on the chart here. So as you can see, we said we count from 12 midnight to 12 midnight. So on Monday, 12 midnight New York, this was the opening price. I'm just going to give you a rough. So let us say price opened here. This was the opening, right? Price here. Then we have a low. Price drops here. This was our low. Then as the week goes on, we have a high here. As you can see, this is the high here. I've expanded it to that. Then as the week was closing, we have the closing price here. This is the closing price. So we have the open, low, high, and close. This will remind you of those who are not familiar with candlesticks. I'll show it here. Bars. Look at the bars. Isn't this similar with the bar? Even if we were to take it to the weekly. Let's see how it comes up. So as you can see on the weekly candle, you have the open, low, high, and close down here. So I prefer using the candlesticks. They present a better price reflection for me. At least I resonate with them. So I'm going to try and remove some of the useless stuff we have already made use of. So if you were trading that way, knowing that usually Thursday, Friday is a reversal, you could be buying here, exiting somewhere up here. You would have made yourself for the week, if you were trading this currency, over 150 pips, 160, 170 pips, just with that simple concept. So let me try and remove some of the clutter. Right. So we're saying Thursday and Friday, usually, if we are in a bullish week, expect Thursday and Friday to be reversal. Latest Friday. If that reversal doesn't come on Thursday, expect it to happen on Friday. But you do well to try not engage the markets in those days, or rather you will be counter trading it. So here, look at where I bought it, where I sold here, right at the top, right at the top. Its price was screaming high because I knew usually this is going to be a reversal on Thursday and Friday. That's what happened. Price attempted to rally, then it dropped, and it closed right here. I'm still looking for this gap to be filled, but even if it doesn't, one would have already made their back, as it were. So let's if we were just to go to how much this setup would have offered in terms of pips. If this gap is properly covered, that's over 80 pips, folks. And if it doesn't, at least over 50 pips. 50 pips, that's it for the week, especially with currencies. And if you're trading it the right way, that's what one should be targeting. Don't expect too much. Don't be greedy. 50 pips, 60 pips, that's it. And you would have made it in just under 24 hours. You would have traded from here Thursday, and by Friday, close of business, you have made your setup one short, one queue for the week. So that was also what was in my mind as I was framing this setup. I knew that usually Thursday, Friday, because we've already seen Monday, Tuesday, Wednesday are bullish days. Thursday usually a trend reversal. That's one. And I've got two. I've got a fair value gap here to the downside, which I'm looking for to be filled. That's two. And on the dollar index, I've got a fair value gap up here that I'm looking for to be filled, which is confirmation that currencies should be dropping, right? So if you were, as a sideline now, if you were to be taking a setup in on Friday, on what session? Let us see. If we to be taking a trade on Friday, New York, I tend to trade mostly New York. So after following the high impact news, because you have already said that we are looking for the dollar to go higher. Following this high impact news at 8:30, and you are looking at your charts, this is where's 8:30? 8:30 is round about here. Yes, this is 8:30. So this is what happens. Let me go to the 15-minute rather, so that we can have more candles on the charts. So price, we've seen it drop in London session. It's dropping. Big news is still coming here. We've seen a breaking structure here. Breaking structure confirming that now we could be turning to the downside. Then come 8:30, we have a swing here. Let me highlight this swing high here. A swing high is made up of a lower candle to the left and lower candle to the right, and there is the one in the middle is higher than the two. That is a swing high. So you've got a swing high here, and then we have this candle here. ICT calls it an order block, and I've come to accept it or to learn it also as an order block because it works every time, most of the time. In fact, most of my trades are based on this concept. So now, as we drop and break below this level here, usually price, before it takes a direction, it breaks its in structure, then it goes back up. Now what does it do? Come 8:30, shoots back into that order block. Let's highlight it. Bottom of the order block here. I don't know if I didn't do it properly. I didn't want this video to be this long, so I'm going to quickly cut it now after I explain this. because there's a friend of mine, I don't remember his name. He said I should drop into the 15 minutes. So this is for you. I wish I would recall your name, but you made a comment on the video in the comment section. So we have price drops and it shoots back up into the order block, then it cascades, draws, where into this fair value gap. So if you had waited for this setup for the week, let us see if this would have made your bread and butter. By price just dropping into this fair value gap, that's 50 pips. 50 pips, folks, just one trade. Because you are using the very same concepts that we are. Now it's late in the week. This is Thursday. We've already seen an attempt at reversal. This is Friday. There's high impact news. There's also fair value gap. Then the dollar index also is showing willingness to go higher because of the concept that we've mentioned. Then you frame your trade setup based on that, folks. Well, you will lose some. There's no doubt about it. But consistently, you'll be milking the markets because you are always trying to push yourself in the side that is winning 9 out of 10 times. So I hope you found value in this one. This is the first video for 2022. More is to come. We'll be doing a series on prop firm challenges and how one can be consistently profitable with these prop firms. I'll be doing a series. I'll be taking challenges. I'll be reviewing them live with you guys so that you can find value. And we'll continue with our US 30 series because there are 50 videos that I want to put up there, how to master US 30. So we are still counting. And we'll be also looking into other concepts as well that may not be related to US 30, but to trading in general, trading psychology, and money management, and a lot of things, guys. So keep tuning back in. I hope you found value. Have a good one. But sorry, this was a long-winded one, but I believe everything that was in there was to help those who are seasoned, those who are fairly new, and everyone will find value. So until next time, keep dropping your comments in the comment section. Let me know what else you want us to talk about on this channel. And please share, subscribe, and help others also to come to an accurate knowledge of these things. So until then, guys, enjoy the rest of your evening from my side. Yes, and those who are watching from the other side, whenever you decide to watch this from, take care for now. Bye-bye.